Okay, welcome to the Swing Trading with Cycles channel. We're going to do an update on precious metals today. We will start with the gold to silver ratio because I didn't get a chance to do that in the last video. It is October 31st, so we had the close of the October candle today. Today we start the November candle, so the last 2 months of the year. We're here at the home stretch, and that's important because this is telling us the shape of how the year is going to close out. So as I said, we'll start with the gold to silver ratio. Let's look big picture. And we'll look at the annual chart. We'll take all of the drawings, the indicators off. So this last pretty complete candle we have, or the oldest complete candle we have here, is from 1967. Again, this is an annual chart. Every single year is an entire year of price action. And I tweeted about this over the weekend. If you're not following on Twitter, definitely take a look at the link in the description. Very timely updates there. And you can see we are above the high. So first off, what is this right here? I'm pointing at it. The 2021 candle is a swing low. What does that mean? We made a new low, and now we've made a high above the candle that marks the low. What's the candle that marks the low? This candle right here. What's the high of this candle? 81.79. And we're up here at 85, and we've been higher, obviously. And so this is essentially a false breakdown, as I mentioned on Twitter, on the highest time frames. It doesn't mean we have to hit up here, this target, but that's what this would project to, right? That these two candles are going to become an outside candle of this, which means we already made a lower low, and potentially we're going to make a higher high. Now, that wouldn't be surprising. That is probably what we would expect to happen as we descend into the 8-year cycle low. So that's something that we're going to be watching for. Now, usually this is a very bearish setup for having a big upper wick and a red candle, but now we're getting this reversal. So again, it's important to pay attention to that. The other thing I would call out is this has just been huge consolidation, right? We had this high here, this swing high in 1991, and this thing has literally been declining ever since. We then finally made a higher high in 2020, but that almost seems like a false breakout. So you have this reversal happening in real time, which tells you it wants to go higher, but then you have this is basically a false breakout of this whole move here. So kind of conflicting, right? So we're going to have to watch more price action as always. And also this is a ratio, right? Again, just taking a step back. This is the ratio of gold to silver. So as this goes higher, gold is outperforming silver. Now, to be clear, they could both be falling at the same time. It just means that silver is falling faster. Silver is going down more, essentially, right? Like silver is down 30% and gold is down 12%. That's big outperformance for silver in terms of to the negative. So let's look at the monthly chart, zoom in a little bit. Now, if we wanted to add some kind of notion of cycles, right? So we had a big bottom in 2011. That was the big bear market high, right? Or I should say, that was the high that we descended from in 2011. So the high for precious metals, that is. Because generally, when this is moving lower, the gold to silver ratio, precious metals are also moving lower. When silver is underperforming gold, it generally is bad for precious metals. So we had this major low in March 2011. And then we rallied for 59 months. So we made a top here, and then we dropped into this cycle low here on month 63. So we declined for about 4 months after that top. And this teal line you have here is your 50-month moving average. So a very long-term average. And since that bottom in July 2016, we then rallied again. We had this kind of almost like an artificial high from the COVID spike, but you say artificial, but what that really was capitulation, right? All assets were getting thrown out. So you had this big spike up here, March 2020. You consolidated for a few months and then kind of broke down, right? Now think about that. This whole move up, this is really important, folks. This whole move up here, this is the false breakout we just looked at on the yearly chart, right? Again, multiple time frame analysis, right? We had this consolidation, and then wham. So once we went, we can start drawing lines back again on this, right? So once we went below this low here, that was your signal. This thing is probably going lower. Doesn't mean it has to go lower, but that's what you generally see, right? Once we make a lower low, you tend to see follow through. Then we have this consolidation, more follow through. What is this? Like this move here could be your lower high to this high here, right? So like we made this move down. Now we're making this move. Now we move lower. So there are definitely signs pointing to this wanting to break down eventually, but we're not. And to be clear, this is a monthly swing high. Like that's important to understand, right? So again, if we finish out the idea of this cycle, so we had this cycle that lasted 63 months at a top on month 59, right? And then out of this cycle, we rallied up to a high on month 44, and then we started our long-term cycle decline. And it would appear that we got our long-term cycle decline in month 55, which was February 2021. No coincidence. That was the silver squeeze, right? Like that's these things are going to be correlated. And then since that low, we rallied, I should say, for 19 months. Why in past tense? Because in September, we made a high at 96.16. And then October, we got a swing low. Or excuse me, we got a bearish swing high. What is a bearish swing high? It's when price goes below the low of the candle that marks the high. It's the exact opposite of a swing low. And so in this case, this candle marked the high. This candle made a high 96.16. The low for this candle was 84.75. Notice we're back above that level. That's important. That's an important pivot point that we're going to want to watch. What this is implying is that maybe we're getting a really short advancing phase for this cycle. I hope you're understanding that. This cycle advanced for 59 months. Like, think about that. That's 5 years. 59 months. This cycle advanced for 44 months. So that's almost 4 years. It could be, I'm not saying that's what we're definitely seeing, but what we're setting up for here is an early top. And that would be bullish for precious metals. These are all important, different pieces of information you want to incorporate into your analysis. Now, we could get a recovery, like this could become a higher low because we haven't broken below this low. We're still preserving an uptrend here. So we can still continue to move higher, and this swing high can get taken out. We're going to want to watch for that, especially as we reverse with this wick, and we're now, again, back above the high back above the low from this candle. So we're going to want to watch that. But those are the implications. That's the potential, right? This was a 60-month cycle that topped out on month 30. And then, I mean, look at this cascade lower, right? This was a really long cycle at 98 months that topped out on month 64. The point there is you want to be watching this price action very closely over the next month or two, because I think this is going to give you an important clue. So that's the gold to silver ratio. And on the daily chart, you can see we're kind of breaking down here. We're forming a little swing high here. Let's look at the actual metals themselves really quickly. So gold continues to decline. It appears to be day 25. It looks like this swing low is not going to survive. But, of course, we have the FOMC meeting coming up on Wednesday. All bets are off. And the weekly appears to still be in decline. It would technically be week 15. Again, that swing low that we talked about on the daily, that's this right here. And that other swing low is this. So the presumption is we don't survive this and we make new weekly lows. We continue the 8-year cycle low. That's the expectation. And finally, when we think about the 8-year cycle, we are just opening month 83 right now, the November candle. As a lot of people are talking about, we've had 7 months in a row of red. So wouldn't be surprised to get green this month, even if it just ends up being a lower high. That is gold. Let's look at silver really quickly. So silver has a top on day 8 so far, 9, 10, 11, 12. We're just opening day 12. And again, just like gold and pretty much every other asset out there, it's kind of waiting on the FOMC to decide its direction. We're definitely going to see a violent move. It's really just a question of to what direction, right? Just that's your only kind of wild card. And on the weekly, right, we talked about the idea that silver looks like it's trying to test this week 5 high, which is at $21. So far is really just consolidation, and like really zeroing in here, we talked about this in our last video. This is just consolidation so far. We're inside the range from last week, which we expected to happen given the shape of the candle. And until we break out above 1979 or below 1883, this is all noise. And again, the FOMC meeting is probably going to give us that move that we're waiting for. And again, as we talked about, inside candle on the monthly as well. So for the monthly levels, the low is 1804, the high is 2122. So we will want to watch those levels very closely. And finally, we will look at GDX. So the GDX made a double top kind of situation on day 22, and now it's continuing to decline. So this is day 23, 24. So today was day 25. We're going to get day 26 tomorrow. This is not looking auspicious. It did look like it wanted to break out at one point. Again, the FOMC meeting is going to give us some kind of violent move, and it could be a violent reversal to the upside. On the weekly chart, we have 1, 2, 3, 4, 5. We have week 5, which is just an inside week so far. So kind of similar to the situation of silver. And really just in general, things are kind of oscillating, consolidating a little bit. Wouldn't expect a whole lot to happen before that Fed meeting, but important to know the levels going into it. So that is a lay of the land for gold, silver, and GDX. We reviewed the gold to silver ratio before. So definitely some tantalizing hints that we could see some bullishness, but I like to focus on the charts themselves and use the ratio as a supplemental, just kind of extra view. But, that does give us some hope, and it is something that we'll be watching and reporting on this channel. So thanks for watching.